Welcome to ABA Africans Building Africa podcast, where I chat with inspiring African entrepreneurs who are participating to the development of Africa. Today we have a special guest, an investor, a young entrepreneur, a husband, father, and truly a man of character, Youssouf Carius. Recently, I have been talking to a lot of African entrepreneurs based in Africa. One of the main challenges these entrepreneurs face every day is raising capital. So I've decided to bring Youssouf in, who's an investor himself and has an investment company in Ivory Coast in Mauritius, to chat about how he started his investment company and the investment landscape in Africa. Let's get to it. Now, Youssouf, welcome to ABA.
Thank you, Amadou.
So first, Youssouf, just so our audience can know who you are exactly, can you tell us a bit more about yourself?
Okay, then I'm Youssouf Carius. Then I'm a statistician, economist by training. Graduated from Toulouse School of Economics, which is a school led by Jean Tirole, who is a Nobel Prize of Economics in 2014. I started my career working for the biggest advisory firms in Europe, such as Bearing Point, Information Resources, and last one was Accenture. Then that gives me a good knowledge of what are my clients' challenges within their business lines, and it was interesting also to see how economics is structured in different environments. I mean, in Europe, in United States, in Asia, and in Africa. And I decided to come back to the continent in 2013 with the belief that I could make the African environment move the right way. Then I worked for Bloomfield Investment. I don't know if you know about Bloomfield Investment. It's the first Francophone Pan-African rating agency of the continent. And there I was vice president and chief economist, and I led the research department, working on several macro and microeconomics issues across the continent, trying to build high-value industry studies, country risk analysis, stock market analysis too. And more, we make that agency one of the most influential institutional across the continent. And that's really a good asset for the business that I just set up. Then after that experience, so I started Pulsar Partners just 5 months ago, which is based in Mauritius, with two financial vehicles under management with two different strategies. The first one of that vehicles is named Pulsar Capital Investments, which is a really high return vehicles with a short-term and direct investment strategy. And the second one is Figa Investment Limited, which is a vehicle dedicated specifically for private equity in Africa.
So do you consider yourself a venture capitalist in Africa?
Yeah, that's a very good question, because I would say I'm just a rational investor. Some will probably call it venture capital, but at the end of the day, even if you are a private equity player, or even if you lead a retail industry firm or so on, any investment decision should hit the same kind of objective in short, medium, or long term. It will be return objective. Then I think probably the two simple questions in that different position you will need to answer is first, what is the expected return of your investment? And probably what is the risk to be managed? And also perhaps something that don't make me just a venture capitalist is that the huge part of our investment, of our action in the continent here is held by the first investment vehicle that we have, named Pulsar Capital Investments, which is, as said, a direct investment strategy owned by this vehicle. And this is dedicated to building sector. And by that strategy, we control all operations in the building sector from the very beginning of our project to the end. And from this point of view, we are not just venture capitalists, but we are also just a rational investor trying to keep opportunity to search for the right opportunity the right way and to match the needs the right way.
Okay, so basically some of the most challenging things that African entrepreneurs face in the continent is raising capital. And, I was so excited to have you on board because I'm just want to hear you explain to me and our audience, why do you think it's so hard for African entrepreneurs to raise capital in Africa?
Yeah, that's a really good question, Amadou. I think there are really multiple reasons to answer that. I think perhaps the very first one of that reason is confidence. I would say it's difficult to build an efficient credit system in an environment where it's difficult to trust the administration, for example. It's difficult to trust the figures that you have available. It's also difficult to trust even the environment itself. And in USA, for instance, funding is something natural, even if you are known as a high-risk borrower. And why it is the case there? Because first, the credit system knows you there, and also because the credit system knows you, it could price your condition the right way, mastering the risk because they are proficient and reliable information on you. And it's simply not the case in countries in Africa. But the paradox is that even the credit system is difficult to target the right audience and to manage the risk the right way. But still, there are multiple opportunities existing, and that's the problem. And other problems, perhaps remaining, are I would say lack of efficient financial infrastructure, or even non-effective or I would say performing regulatory and legal framework. And finally, I'm pretty sure that Africa still needs to develop alternative financial systems such as capital investment, such as microfinance, dedicated and adapted SME stock market, and so on. Because this will be a specific and adaptive solution to our context here.
Right, and if you look at, basically there's a gap. You have the large financial institutions which will actually only cater and only invest in companies that have a trajectory of sales. And you also might have microfinancing organizations which are only focusing on like small, really like tiny mom and pop shops. But there's a gap for that small business entrepreneur to really find the financing that they need. And how are you working with your company to look for those companies?
Yeah, that's really a good observation. When you look at talking about financial markets, when you look at high tickets, when you look at big companies that operating in Africa and representing opportunities for the financial sector, it's a really small market. If I take the case of big, really huge investment funds like KKR, like other investment funds in US, for example, they are all okay with the fact that they need to be present in Africa. But the tickets for this kind of funds, it's around $100 million. And how many companies you have in Africa that are able to absorb that $100 million? There is only a really few of them. But the real market in Africa for the financial market, talking about the financial market, is really the medium size and the small size of tickets. But there's the cost of following that kind of investments behind. And what we try to do with Pulsar partners is to match first that medium part of opportunities with the direct investment strategy that we have, and the smaller part of that market with the private equity strategy that we have. And for the first one, for the direct investment strategy that we have, we invest roughly in constructions in Côte d'Ivoire. Just one figure to give you an idea of which kind of performance it represents. In Côte d'Ivoire, building industry value added to the economy rises about 50% a year since 2012. And we expect this trend will continue for the 4 or 5 years coming. And this is what we want to do. We want to be part of that performance and make our investor benefit from that kind of performance at a sector level. But if you just monitor what opportunities exists on only the top of the market, it will be really few operations for that. But if you want to match if you want to benefit the right way, good sector performance country by country level, I think the right strategy will be part of the operational side and be a direct investor, not just a venture capitalist or not just a private equity firm, but you need to be from the lower level to the top one at an operational level.
Right. And you touch on construction a little bit for being the market or like the main industry that your company focuses on. But I heard this guy speak once, and his name is Mike Rothenberg. He has an investment company in Silicon Valley, and he has this notion of blue versus red ocean strategy. So where blue is upcoming markets like virtual reality, space, and such. And red is very competitive markets, which is basically like a bloodbath market. So his investment strategy is to focus on companies that are in the blue ocean. It's just an example of an investment strategy that Mike uses. So what is exactly your investment strategy?
Yeah, our investment strategy is dual. First, with Pulsar Capital Investment, we just invest in in constructions. Then we have our first big project, which is called the Olympus program, with 5 high-standing projects in Côte d'Ivoire. That is an 8 months investing program held by Pulsar Capital Investments. And in terms of return, we are able to generate up than 15% of return on that kind of operation. This is what we call direct investment, because we master the operations from the very beginning to the end. Then the second strategy that we have with the second vehicle is held by Figa Investment Limited, which is a really private equity firm. Then we try to focus on the early stage companies, early stage startup, and we are searching for, I will say, startup on financial sector, on technology or insurance, for instance, with a very good project, and they're willing to cover at least the continent or even a huge region as a targeted market. Because it's really important for us, because the business model on that way of thinking should be built in a way to easily cover the target market. It means easy replicable, it means rational product development, and it means optimized to cover a huge region with its specificities that could be different from a country to another. And this is what we are searching for. Early stage companies, early stage startup in technology, in finance, but with the willing to cover a huge part of that continent.
Okay, so yes, let's say I have a startup company and I'm actually an early startup company and I'm in the financial sector per se. What are some of the main success factors that you are looking for, and what does your deciding factor consist of?
For me, first is the need you want to answer. and the target market. And when I say target market, it means its size, its characteristics, and your strategy to cover it. Then the main success factor for me will be your capability to answer a critical need and cover huge markets with an optimal strategy. Optimal in the sense of the cost needed to cover each customer, in the sense of the time needed to make your business model profitable. Then indeed the quality of the team will be key for us too. The rationale behind the business plan and the figures is something really important too. All start with, I think, the right hypothesis on the market, on your commercial performance, according to your investment plan. Because if you talk about commercial performance, then you talk about investing in marketing. And if you talk about your product performance, then you're talking about investing in R&D. Then all of that should be rational. And to resume, I would say a great part of the decision process for an investor, for us, will be based on the rationale of what you want to do and the way you want to do it. It seems easy, but probably I think the most difficult thing project owners face at their early stage life cycle is really build the right business plan with the right rationale behind it.
So do you sit on like the board as a board of directors and on the companies that you invest?
Sure, we will. We will challenge strategic decision in the sense of good governance, because that helps the company developing his business. But also we will help developing the business itself. We are not a passive investor. We consider that we are actors of business development. And our network, our financial expertise, and strategic knowledge could make the difference for developing a startup.
Okay, so a lot of most of the things that you see here in the U.S. and I'm sure sometimes it's actually starting to come up in Africa as well, is that most entrepreneurs, once they have an idea, they go out there and start looking for funding, and that's mainly in the U.S. So what's your perspective on that? Like, should you just have an idea and go out and look for funding?
Yes, that's a good question. I would say it depends on your environment. As I said earlier, in USA, funding is something natural, but in Africa, in multiple countries, I would say perhaps the majority of the countries in Africa, funding is really a huge problem. Then when you set up a business in an environment, you should take as a parameter each of its characteristics. So if it's in Africa, then probably funding will be difficult at the first stage, at your early stage life cycle. Then you will probably try to lever money with your what we call love money, for example, with your family or so on, to start the business first, and then develop a relationship with your banks and so on. Then perhaps the second stage will be bank funding. Also, we have in Africa, I would say, capital markets development lack. Then it's not so easy here for a startup to be funding by a capital venture company, because the small tickets are not the priority of the existing companies as it is for us. It could be difficult. I would say roughly that when you start a business, all your environment is considered as a parameter. And if it's in Africa, bank funding, capital market funding should be considered, but should be considered perhaps in the second stage.
Right. And what's really is your take on the fact that if Africans want to create, if you have a business and your first idea is really, I'm going to get a prototype, then what is your suggestion of what entrepreneurs should do when they are looking for funding?
I would say first thing is to be fully dedicated to its project. Then if you're looking for funding, then you need to build the confidence between you and your potential investors. Then it means give the right visibility to investors. It means play as a transparent player to investor, a fully transparent player to investor, and it means build them, make them see how they will gain for your proper business. And that's key, because once you set up a business, sometimes you set up a business because you're passionate by it. You're passionate for something, then you set up a business on something you like. And it's difficult when you like something to make understand someone else what will be his financial gain by investing in your business. And
Right.
this is something critical, no?
Did you receive any funding for your business? And also, what's your growth plan? Like, are you looking to grow within other countries of Africa?
That's a good question. No, yeah, at the very beginning of the idea, and before incorporating the vehicles, etc. Indeed, I had to level like what we call love money, because my family funded me to do it before I get to the bank and try to have funds from the bank. I had love money for my business. And what is interesting with the investment fund, business, is that investors paid Pulsar partners for the management of the vehicles. Then when you're ongoing, it's really easy. Just you need to be sure that your performance is right, that you're in line with your expected performance, etc. But when you're ongoing, it's easy. But the very beginning, you need to fund your business. And I fund my business by both love money from my family and the bank also.
And what about are you planning to grow within other African countries?
Yeah, we started with $4 million asset under management for the very beginning. Then we want to hit, in 2020, we want to hit the $20 million under management based on both our speculative and private equity strategy. But we're expecting our next fundraising in less than 2 years to answer direct investment needs with high return at a medium and long-term perspective. This will help us cover all the maturity spectrum for different type of investor. At this stage, we have Pulsar Capital Investment dedicated to direct investment with a short-term strategy. We have Figa Investment Limited for private equity with a long-term strategy, but we need also to match with the direct investment strategy the medium and long-term perspective that investor asks for.
The last part of the interview is called the ABA moment. And what I like to do with the ABA moment is basically ask you very simple questions and want short and sweet answers and to the point, if possible. So if you were to live in one country in Africa and start a business, where would it be?
Yeah, that's a good question, difficult question. I would say it depends. It depends on the type of business. I would say if you're on the B2B market area, for example, I would say perhaps Rwanda. Rwanda would be the greatest state to be because of the business environment, because of the easy how easy it is here in Africa to do business in Rwanda. Because of the institutions also. And if you are perhaps in the B2C sector, then I would say definitely choose Nigeria because it's the biggest market.
So if you had only 1,000 to start a business or invest in Africa, knowing what you know now, where and how would you invest your money?
Okay, I don't know. Probably I would try to set up a kind of low-cost food factory to cover Nigeria natively.
Hey, that's not a bad idea. Have you read a book which had a huge impact on yourself? If so, what's the name and author of the book?
Oh, great. Yeah, I have in my desk always the official biography of Warren Buffett. For me, he's, I think, the greatest rational investor of the century. Very far from mathematics modeling and so on, always searching for the right and logic merchant model, etc. I think this is really the book I recommend to any investor.
Okay. In your opinion, what is the next breakthrough idea or business opportunity in Africa?
This is what I'm searching for. But I would say probably mobile payments. There is a very, very huge gap between what is currently feasible in Kenya, for example, compared to all other countries across the continent. And the one who will build the right solution for that sector with the capability to cross countries' borders and its specificities, I think, will be the next Facebook.
Oh,
that's it.
Perfect. Well, Youssouf, man, this has been really great, and I really appreciate you taking the time to join us today and tell us a little bit more about the investment environment in Africa. And this has been really beneficial. And thank you for joining us.
Yeah, that's a pleasure. That's a pleasure, man. Thank you too.